What's up, guys? The market bounced like a kangaroo on a trampoline. In today's video, we're going to take a look at how far up that kangaroo can end up bouncing. Is it going to continue bouncing? Is the trampoline going to be pulled from underneath Mr. Kangaroo? We don't know yet, but we're going to take a look at every aspect in the market. We're going to take a look at the SP500, the NASDAQ, the Russell, the VIX, and the crypto markets, because the crypto markets are telling us something very, very interesting. So without further ado, let's get started with the video. All right, first and foremost, President Trump said that the Senate could strike a deal to end the government shutdown sometime next week. That is obviously something that is very bullish for the overall market. We need to understand that technically, the market does seem like it wants to get a pullback. When you look at the charts, when you look at everything, all of the different dynamics of the market, it is screaming that there is underlying weakness within the stock market. But these bullish news articles, things like this, things like the Trump's Senate hearing with the Chinese tariffs, things like that, if they get passed, are going to be bullish for the overall market. So keep that in mind. It's a very news-driven market at the moment, and this is really the only thing that is keeping us very, very bullish. But there are interesting things that are happening under the hood with the stock market that, regardless of whether the Senate news or the tariff news occur, that are still maintaining bullishness. First thing that I want to take a look at is Apple, because we're going to take a look at Apple. Apple held support like nothing even happened in the stock market. While the rest of the market was dropping very, very heavily, Apple held its own like a one-man army. All right, I'm going to get better at these hyperboles and everything like that, and we're going to take a look at how strong Apple was. It was like the 300 performance against the Persian army. I'm going to take a look at that, all right? All right, this is a daily chart of Apple. What we can clearly see here is Apple is holding support, did not drop. Very, very supportive stock. It doesn't matter what is going on in the stock market, Apple is there. It's a really, really solid, great friend. Doesn't matter what's going on. Apple will support whatever is happening regardless. That's the type of friend that you want in your corner. So Apple, barely moving at all here. You can see for 4 days in a row, price did not move. While the rest of the stock market was dropping very, very heavily, Apple held its own. Now, what does that really tell us? Apple is the second largest company in the world, worth trillions of dollars. If Apple, that is heavily influenced by negative news with China, that is heavily influenced by the overall market as a whole, the fact that Apple is holding so well should tell us something about how strong the market actually is, okay? Apple not dropping is very, very important, okay? So as we can see, Apple held 266. Pragmatically speaking, held 266. It's still showing trouble above the 50% fib, the 618% fib. Resistance at 272. We're not denying that. But I really want everyone to just look at what is happening with the tech stocks one at a time. Okay, so far, looking at this pragmatically, what is being shown here? Apple is holding support, stagnating, giving rise to buyers to step in for a potential bounce. That is what I'm currently looking at on Apple. Amazon. This is a daily time frame of Amazon. This is one of the only large tech stocks that flipped green into a good move like this. So Amazon dropped very, very heavily, held above 240, closed back above 244. This is a very, very strong bullish move that we're seeing right now on Amazon. It's a very good sign that it held above 240, because that is a very strong psychological level that bulls needed to hold for a move to the upside, okay? And if we look at this in terms of the fib levels, what we're going to do here is we're going to make a fib level, and we're going to retrace this from the most recent highs to the most recent lows. What does Amazon show us right now? Amazon closed above the 2.36, the 23.6% fib. It has room to now trade into the 38.2 and the 50% fib of this move. The reason why we look at the fib levels is because they give very clear levels of support and resistance. This still shows that there is more room to the upside. As long as 240 can hold on Amazon, this is still a bullish situation, in my opinion. So far, what have we just looked at? Apple and Amazon are holding support, doing well. That's very, very important for the overall market. And the fact that Amazon is doing well is also important for the Russell 2000. We have to key off of how the consumer stocks and how stocks where people spend money on are actually doing. And Amazon is one of the most important stocks. When people have money to spend, they spend money on Amazon. They go to Walmart. They go to Costco. They spend money into these retailers. So Amazon is a retailer as well as a tech stock. It's one of the most important hybrid stocks on the stock market. And the fact that Amazon actually closed green is really, really important for the overall market. All right, so this is a daily time frame of Microsoft. Microsoft came back down to its overall lows from back in September, down here at 495. What is it showing now? This is a doji candle at a level of support after extreme weakness. How high did Amazon go? It jumped up to over 550. But in terms of a percentage loss, how much has Microsoft lost in the past 2 weeks? Microsoft has dropped over almost 11%. We dropped almost 11% on one of the largest trillion-dollar companies in the world into a level of support. Okay? So this, you have to be extremely naive, and you just have to be willing to lose money if you want to end up shorting a setup like this. This is basically telling us that the market is at a level of support after a huge drop lower. You have to be looking for dips. You have to be looking for long opportunities, in my opinion. So Microsoft is getting a really, really good long opportunity right now. By all means, yes, the market can drop. It can go back down to 480. That is completely justifiable, of course. But a trade, if you were to take a trade right now, this would not be a time to end up going short. This is a time where you want to go long into weakness, into levels of support. All right? So as we can see, 495 is holding. 490 is holding. This is most likely should be getting a bounce back to at least 505. From 505, from 510, this would be the time where you would end up wanting to go short. So the reason why I'm looking at 505 to 510 is because when you have a move like this, we just made the fib levels here, all right? From the most recent highs to the most recent lows, the 23.6% fib is at 507. That, from the current price, is about a 2.5% gain. Let's just go ahead and check. That's a 2% gain. To the 38.2% fib, that's a 4% gain. A 4% gain on Microsoft, if you were to buy options, would be over a 30-40% gain in terms of what contract expiration you're buying. Okay, so this is a really solid, good risk reward to start leaning long, in my opinion, on Microsoft for a small bounce. I'm not saying the market is going to make new all-time highs. I'm saying this is when you want to start looking for dip buying opportunities because the upside potential is astronomical. Back here in September, I was very vehemently bullish on Microsoft. Down at 490, 505. As we were chopping around over here, I mapped out how good of a dip buying opportunity it was, and we ended up rallying. Okay, so this is no different. We might get a small bounce. Obviously, you could feel the bearish momentum in the market. You can feel it. It's very, very difficult to be extremely bullish on the market. We're not arguing that. But when something is holding support like this after a huge move lower, you have to be extremely naive to want to go short. Do not end up chasing the move. Let the move come to you. All right, so this is that on Microsoft. I'm expecting a bit of a bounce. All right, this is a daily time frame of Tesla. Tesla, not as strong as these other stocks. We gapped down below 440. Pragmatically speaking, this is a bull flag. Consolidating at the lower end of this level of support. We still have room to go on Tesla to around 410. So that is another, in terms of percentage, this would be another 3 to 4% lower on Tesla that we could drop. Is this an automatic reason to be extremely bearish? No. This, once again, the fact that Tesla is holding this consolidation level, holding at this level of support, is very, very important. Tesla, especially, is not just a car company. It is a manufacturer that handles data across multiple different aspects. It is almost certainly going to involve itself in robotics. All of the data that Musk is getting from X is going to be used to train models and train data for robotics. Tesla is way bigger than just a car company. So investors know this as well. So that's why it is one of Wall Street's favorite stocks, because there's so much upside potential. Regardless of whether it's profitable or not, the team is there. The larger infrastructure for all of this to occur is also there. So 440 is a very major level of resistance, but the main level of support is 415. We still have a bit more room to go. Overall, very, very bullish on Tesla. Looking for dips to buy. You have to be insane to be extremely bearish on Tesla. If we break below 415, we have a lot more room to go. But regardless, 400 and then 380 are two major levels of support. I'm definitely looking at Tesla for some dip buying opportunities. So what have we seen so far? Amazon, Google, Microsoft, and Apple are doing pretty well. Tesla is also technically holding above a level of support. You know what else looks really, really interesting? Meta. All right, so we're going to take a look at Meta now. All right, so this is a daily time frame of Meta. Whereas Tesla was one of the biggest losers today, Meta, such a beautiful trade. Such a beautiful opportunity to go long. It jumped almost $20 from the lows, ended up closing on the highs. Not only did we retest this very, very important trend line from back in August as a level of support, we broke back above 615, now into a bit of a bounce. Okay, so Meta is really trying to show that there is bouncing potential here. Mr. Kangaroo is live and well on Meta here. So it looks like there's room to go above 630 on Meta. Beautiful hammer candle at the lows here. Okay? Once again, how much did Meta just drop in the past 2 weeks? 20%? Meta dropped 20%. $1 trillion company dropped 20%, and you don't want to end up trying to buy the dip? This is, to put it into perspective, $1 trillion. 20% of $1 trillion is $200 billion. You don't think investors or banks or hedge funds are going to look at Meta and look at it as a good opportunity to buy the dip? That's absolutely what's going on. So if Meta is at a really, really solid place for a bounce, Tesla, Apple, Amazon, if these companies are holding support or they're giving a good opportunity to go long, Microsoft as well, right? Then you have to understand that overall, what is that really telling us about the market? There should be a bit of a bounce. So far, based off of all of these large tech stocks that we saw, you have to really be dumb to start shorting this. And that is what my thought process is. So Meta, as long as it can hold above 610, this is going to see 660 soon. From 660, and if the market starts to rally, Meta is going to end up filling this gap. All right? There is so much positives that are coming out of Meta. The amount of money that they're going to be piling into AI is crazy. So just keep that in mind. Meta is also one of the leaders in technology where you can put on glasses essentially and look at your apps and look at things through your lenses. So they are developing technology where you put on glasses, you could watch Netflix on your wall, you could watch movies, you could text people from just clicking buttons in the air. Okay, so that's the stuff that Meta is also working on, not including all of the data that they get from WhatsApp, Instagram, and Facebook. All right, so there's a lot that Meta is involved in. Keep that in mind as well. Meta is it's way bigger than just a social media company. So very, very interesting. You have to contextualize things in terms of what investors are also looking at. This is a give me, in my opinion. There's still more room. If Meta fails 610, then we're going to collapse to 580. We're most likely going to collapse even lower. But there's a lot of upside potential on Meta. All right, keep that in mind. All right, this is a daily time frame of Google. What does Google look similar to? Google looks very, very similar to Apple. This is a very, very important time for the market when you're contextualizing everything. Google has rallied very, very aggressively from 240s, 250s when we were initially long, right? We rallied up to 290. Did this drop very aggressively as the market was making new lows and cracking? Google held 275. Did Google start to make new lows? No. Apple and Google held their own here. This is very, very important for the overall structure of the market. Google is also very heavily influenced by AI. They are really, really also looking to invest in these other companies as well. Very, very important, guys. So Google holding this level of support, very, very important. And these are just good internal dynamics of how strong tech stocks in general are. Okay. So far, what have we seen? We're going to also take a look at the chips. All right. But just what have we seen? Tesla, Amazon, Microsoft, Google. We're going to take a look at Netflix as well. Apple. All of these stocks are holding very, very well. They're holding strong, holding above support, and giving buyers good buying opportunities. So Google holding above 276, did not make a new low. All of these are very, very good, important signs for the market, in my opinion. All right. So this is a daily time frame of Netflix. Netflix also nice and simple, holding above 1050, trying to create a bottom. Not a great sign, not a great time to go short. Rather, it's a good time to end up looking for long opportunities. Okay. How much did Netflix also drop recently? 13%, guys. 13%. Is this the time where you want to start going short? Probably not. So let the market even itself out, bounce a bit higher. Once we get a bounce, if you want to start going short there, by all means, do that. But the large tech stocks as a whole, the strength out of Apple and Google from not even making new lows, it's really, really tough, in my opinion, to start going short. All right, so keep that in mind. Netflix is also doing pretty well. All right, next, let's go ahead and take a look at the chips. All right, this is a daily time frame of NVIDIA. NVIDIA, the largest company on the stock market on the planet, recently broke $5 trillion market cap. Do you want to start looking to go short? Do you not want to buy the dip on NVIDIA? Do you hate yourself? I hope the answer is no. So this is a really, really good spot to end up going long. We came back down to a major level of support into the 180s. And we bounced. Mr. Kangaroo was live and well in NVIDIA here. All right. It held support so well. And what did we end up doing? We also ended up going long on NVIDIA. To be bearish into weakness on NVIDIA is a pipe dream. So how much did NVIDIA drop recently? NVIDIA, $5 trillion market cap company. Banks and hedge funds are looking to buy dips into winners. NVIDIA dropped over 15% recently. Is this now the time where you want to go short on NVIDIA? Absolutely not. You don't want to do that to yourself, in my opinion. You let NVIDIA drop lower, you look to buy dips on NVIDIA. This is not a stock that you want to automatically become long-term bearish. The only reason why NVIDIA recently dropped this much is because Michael Burry released on his 13F that he was short NVIDIA and he was short Palantir. I don't support Palantir, obviously, because of the military implications. But to go short Palantir and to go short NVIDIA, it's not a great trade. Obviously, Michael Burry has been incorrect many times as well. He did call the big short, but it does not mean that he's infallible. So once again, we bought the dip on NVIDIA. We also are bullish on AMD. And what is AMD showing us? 227 is holding a support. We are looking to try to break back above 240 on AMD. By no means is the market telling us that we're going to make another leg lower. Right now, as a whole, from all of these tech stocks, from everything that we have just looked at so far, Tesla, Netflix, Google, Apple, Microsoft, Amazon, NVIDIA, AMD, all of these are telling us that the market is giving a bit of a bounce. It wants to give a bit of a bounce, okay? So if you want to be short, by all means, just wait a day or two, in my opinion. Just wait a little bit more for the market to bounce. And then if you want to be short, go for it. But down here, not the time to do that, in my opinion, all right? So the chips as a whole also look very, very bullish. Not extremely bullish, but these are at these levels here. You don't want to be bearish. And if at a point you would not want to go short, you have to look at the opposite direction and rather look to go long. All right. So that's that for all of these large tech stocks. Next, what I want to do is I want to take a look at the VIX. All right. So this is a daily time frame of the VIX. The reason why we look at the VIX is because it does the opposite of what the market is going to do. So it's important to look at the VIX. All right. So very simply, if the VIX is rising, that means the market should be falling. What the hell just happened to the VIX on Friday? What happened to the VIX on Friday, guys? The VIX was up 15% intraday. It got slapped. It completely capitulated down, and it closed at the lows on the VIX. All right. So this is clearly not the best sign. It does look like we could end up bouncing a bit on the VIX, but as long as we hold below $21 on the VIX right now, it looks like it wants to continue dropping. And that is currently the only issue right now that I see on the market. The VIX does look like it wants to bounce a little bit higher. Generally, when we get a large wick like this, we should fill back into it a bit. That is the only issue right now for the bull case on the market, that the VIX does want to bounce a bit. That is pragmatically what I'm looking at right now. And of course, that $17 level, that is very, very important on the market. We're still trading above 17. That is still a warning signal for the overall market for bulls. So just keep that in mind. If the VIX gaps down, if we get some positive news for the government shutdown or things like that, then the VIX is going to capitulate and the market's going to bounce. But right now, this is the only real signal. This is the only real bearish signal that I see in the market. All right, pragmatically speaking. So with that being said, we take a look at the VIX. To wrap it up, I want to take a look at the S&P, the NASDAQ, and the Russell. All right. All right. So first and foremost, this is a daily time frame of the IWM, the Russell 2000. This shows the most economically sensitive stocks. It's a basket of banks, healthcare stocks, consumer, anything, retailers, right? Anything that involves people spending their money or the underlying strength of the economy is in the Russell 2000, okay? So the Russell 2000 was the biggest winner. So the fact that the Russell 2000 was trading outside of the lower level of the Bollinger Band and it bounced very, very aggressively on the first instance where we were overextended, it didn't even drop lower, right? It bounced at the first instance that we were trading outside of the lower bands. This is generally very, very important for the Russell. That's another reason why the IWM did so well, is because the IWM is also heavily influenced by the strength in the Russell 2000. All right, I was just explaining how Amazon is not just a tech company. It is also a consumer company as well. So this did very, very well. The IWM was the biggest winner in terms of all of the indices, and we broke back above 240, closed green. The NASDAQ didn't even close green. the Russell 2000 did. Okay, so that is very, very important to monitor and very important to realize here. This is not extremely bearish for the market. We do have room to go to 240 and to the downside. The Russell has support at 238. So as long as 238 holds on the Russell, we have room to break back above 245, 246. And if we break back above 245, 246, we're going to end up seeing new all-time highs in the next month at maximum. Okay, so keep that in mind. The IWM looks very, very bullish. Biggest winner. Okay, the NASDAQ. This is a daily time frame of the QQQ. Is this a bearish? Is this bearish? Is this like a bearish sign that people look at? Like, oh, wow, we bounced off of the lows and now it's a huge hammer candle. Everything that you learn from candlestick analysis, from technical analysis, this is one of the easiest by default signs of a reversal of a trend. So the trend recently was down. We got a hammer candle into a level of support. The next move should be a move to the upside. And the momentum and the trend should start to drift higher. That is what the technical analysis and the candlestick analysis essentially shows. But are we going to hold? So pragmatically speaking, as long as 604 can hold on the NASDAQ, which is all of these prior highs here, 604, 605, as long as this holds, this is a really, really good sign for the NASDAQ. Because not only is the IWM holding, the IWM permeates strength into the S&P 500. The S&P 500 is going to permeate strength into the NASDAQ. And all of these large tech stocks, what did we see? What did we see in general in all of these large tech stocks? They were bouncing. They did very, very well, or they were strong, okay? NASDAQ, no different here, okay? So that is very, very important on the NASDAQ. Let's go ahead and take a look at the S&P 500. All right, so in the last video, I said that the S&P 500 would come to between 662 to 664. We dropped exactly to those levels, and we bounced. Why was this level so important? Is because on the futures, the SPX, this equates to 6,700. 6,700 held as support, which was 664. We bounced very, very aggressively. As a whole, the large tech stocks, the Russell, the NASDAQ, all of these things are pointed to a continued move to the upside here, especially with the news where Trump said that this week could end up being the government reopening. That is also very bullish for the market. Keep that in mind. Very, very simply, we came back to a level of support and it bounced. Okay, what else do you really want? The market is doing very well in terms of price action. It's failing at levels of resistance, bouncing at levels of support. This is a healthy market, in my opinion. Apple and Google are almost at all-time highs when the S&P dropped almost 5%, 3%. How much is it down from the recent highs? It dropped 4%. The S&P really got slapped down recently, right? In the past couple of weeks. Apple held close to its highs. Google held close to its highs. We're seeing the chips bouncing off of support. So as a whole, this is really, really bullish. Price action as a whole on the stock market is very, very bullish. I will say the VIX is the only bearish thing that I see, just purely based off how aggressive the bounce was. That is the only bearish thing that I pragmatically can tell you guys, okay? Another really, really bullish situation is the crypto markets. And the crypto markets are very, very important to monitor because we have trading on the crypto markets during the weekend. The crypto markets are open 7 days a week, 24 hours a day. So if we are holding like this and showing strength on the crypto markets over the weekend, that's also very important. So let's go ahead and take a look at Bitcoin, Ethereum, and Solana. Okay, this is a daily time frame of Bitcoin. Bitcoin held 98 and is now starting to cross above the most recent levels of resistance at 102. Okay, so it broke above 102 and now it's basically trying to clear above 105. From a standpoint of whether you want to be bullish here or bearish here, this is a textbook bottoming out process, looking for a continued move higher. Bitcoin looks like it wants to bounce. That is a very good sign for the overall market for what is yet to come into the week. Okay? That's that for Bitcoin. What is even more prevalent is what's going on with Ethereum and Solana. We bought the dip on Ethereum and on Bitcoin, and Ethereum is starting to break above 3,400. It's now at 36. So whereas Bitcoin was still trading down here in the equivalent space of Ethereum, we were trading right here on Bitcoin. Ethereum crossed above. Ethereum crossed above, and it is looking to break above 3650. That is very, very bullish for the crypto markets, okay? Solana, also similar situation to Ethereum, crossed above. And I'm going to tell you guys something that I've monitored because I look at the bull and bear cycles for crypto. I've been indoctrinated by the crypto market. This is how I started to learn how to trade. When Litecoin starts to bounce and does very, very aggressively, Litecoin used to be known as the silver to Bitcoin's gold. Litecoin recently jumped over 40% off the lows. The fact that Litecoin is doing so well is a very, very bullish sign for the crypto market. Keep that in mind. Please understand and take my word for it. I could be wrong. But this is one of the most bullish situations for crypto. The fact that Litecoin, specifically, if you guys put a chart of Litecoin as every time Bitcoin almost bounces, back in 2020, back at the lows of 2018, Litecoin almost always preceded Bitcoin's move. Keep that in mind. Litecoin going like this is very, very bullish for the crypto markets, in my opinion. As a whole, to wrap it up, let me take a sip of this coffee. All right. 30 minutes in. If you guys are, watching still, appreciate you guys. Hope you guys had a good week. Hope you guys had a good Sunday. But with that being said, all right, this is really, really bullish. And the most important thing to do when there are abnormal situations of weakness in the market is not to get stressed out, is not to become afraid. You have to look at the weakness in the market as good buying opportunities, because that's what we want. We want to go long into levels of support. We don't want to go long. Would I go long on a Litecoin here after a 40% drop? No. This is what normal people do. Normal people here, oh, Bitcoin's at 20,000. Oh, time to buy Bitcoin. No, you're an idiot. That's why Bitcoin ended up dropping, because you don't want to follow the masses. All right? What do the masses do? The masses sell into weakness. We don't want to be like the masses. We want to make money. 95% of people do not make money on the stock market is because they have it backwards. When things are showing a lot of strength, you don't want to go long into the ones that show strength, but you want to remain bullish on the overall market. Okay? Would I go short on Litecoin here? That's a good question. That is a good question. Because there is a lot of resistance here on Litecoin. We could end up dropping back down to 105, retesting. But in general, is it worth trying to go short? Because Litecoin can end up rallying again, and then you're screwed on the shorts. So that's why the easiest thing to do when there's a lot of strength is look for good dip buying opportunities into weakness at levels of support. All right. So I hope this made sense. I hope you guys enjoyed the video as much as I enjoyed making it. I really appreciate you guys. And we're just going to continue making money. We have been on a complete, absolute tear in the Discord for all of my swing trades, my day trades. Everything have been going phenomenally. People in the group are very, very happy. And it could not be better, honestly. But of course, it's going to get better. So if you guys want access to all of my trades, you guys want access to all of my analysis, everything, the link to join is down below. And we're going to continue to push forward and do better than we did yesterday. That is the only thing that you can really ask of yourself. You need to do better than you were yesterday. Learn from your mistakes. Journal your trades. Control your urges. Control yourself. And if you're able to control yourself, you will be able to understand and be able to manage your positions properly and execute trades properly. Do not approach the stock market emotionally. If you are a very energetic person, do not drink a bunch of coffee prior to trading. It is going to cause you to be very jittery. You are going to end up putting yourself into a state of, you're going to end up becoming neurotic. You're going to end up becoming extremely just aggravated with yourself because of the mistakes that you could have prevented from making. So I hope you take this journey slower. The stock market is not a place where you're going to become rich overnight. You could, but do not approach it as you're going to become rich overnight. Look at it as a tool to understand and learn yourself properly. When you are doing the things right, eventually the numbers will show that you are actually performing very well. If something is not working for you, journal your trades, learn from your mistakes, and try to get better. That is the only thing that you can do, all right? The stock market is also something that is not properly created with structure in your life. It's very, very easy to enter a job and have everything structured for you. The system is already in place at your workplace. You have a set of things that you need to do. All you need to do is do them. You get paid. You don't really need to think about anything extra. With the stock market, there are so many extra variables. There are so many extra things. Your intuition, your gut feeling, your emotions, technical analysis, money, risk management, news, earnings, crypto, the VIX. There's a lot more variables. The most important variable is your mind and your self-control. If you are able to get a hone on everything, that is the most important thing. Do not approach the market inebriated. Do not approach the market stressed. Do not approach the market anxious, angry. Don't try to approach the market where, I need to try to make up for the losses that I just had. Do not do that. These are all things that will cause you to lose money and put yourself in a deeper hole. All right, so I hope this helped. Keep this Litecoin thing in mind. I hope all of you guys enjoyed the video, and I hope you guys have a wonderful rest of your Sunday, all right? Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Have an amazing rest of your day. Take care.